I think before I begin talking about the Canvas, there's a couple of things that are important. First of all, this is the first time I've ever done anything like this, so realize that this is my rookie season and I probably will be far from perfect. The second thing that I want you to understand is that if you've had someone walk you through the business model Canvas before, you're probably going to see some things that I say or approaches that I take to the various categories that are somewhat different or perhaps very different than what you've seen before, even if you've seen me do it. It's important to realize that this is not a by the book kind of fill in the blank with things that are supposed to be there type of a document. This is very organic. It's not expected that you'll be able to fill in all of the blanks and perhaps not even half of the blanks when you take your first pass at it. It's important to know that what this allows you to do is to document what you do know and to hopefully discover what you don't know that would require more research before you come back to complete the document. It's difficult to complete, however, because if you continue to use this, you'll find that after you've initiated your business activity, things will happen in the flow of business that will cause you to return to this and add and subtract things based on the reality of how the business is operating. Finally, I think it's important for you to share this with other colleagues, could be family, friends that you've discussed your business or your business concept with, and allow them to review what you have on this document and to ask for their input. When Mary and I were in our consulting life on a full-time basis, we always said that any document that we prepared had to at least have 2 pairs of eyes on it. And with the business model Canvas, I would suggest that it has to be a lot more than 2. To begin, one of the things that I changed with regard to my approach to this document is that I do not begin in the middle. I begin on the right with the customer segment. For me, there's a pretty simple reason why I do that. I think although there are a lot of reasons to start a business, a lot of things that occur that facilitate a new business, in general, I've found that there are 2 approaches. One thing is that you create something and then go find somebody to buy it. The other is that you find someone that needs something and then go out and create a solution for that need or something that will provide something that they're not able to find, or they can find it and they can't afford it, or aware of it, but it's not in a place and time where they can access it. So solving those problems actually creates the value proposition in a way that is customer-centered. In any event, talking about the customer, you'll notice that it doesn't just say customer, it says customer segments. It's important at this stage of the game to think about the various customers that you would have and how they are similar to one another and how they are dissimilar. Customer segments, therefore, not only can there be more than one customer that's available to your business, there could very well be several. Identifying them as segments will be valuable to you later on when you start marketing to these various groups, so that you channel your marketing efforts in a way that specifically guides a particular segment of your customer area. The other thing that's important is that having various segments of customers might also cause you to create various variances on your value proposition, so that the proposition, the product, the service, whatever it is that you're providing, is modified in some way to relate to one particular customer segment as opposed to perhaps others or another one. Listing the various segments and then profiling each of those segments with all of the information that you can possibly find that defines that customer segment as specifically as possible. Various things that segment customers one from the other can be age, could be location, It could be socioeconomic circumstances. This, quite frankly, is the only area where you can legitimately profile people based on aspects that one would normally not want to choose, because there are some products that are race, nationality, location, income level, that where those particular characteristics will have an impact on the design of the value proposition that you're connecting with the customer segment. As a clear example, I'm working with a client right now that is creating hair care products specifically designed for African American men. That's a recognition that that's a very specific customer segment. In addition to that, he has a particular profile in terms of age, social economic level, and at least at this point in the game, a specific geographic area where he expects his customers to come from. With that in mind, then we turn to the value proposition itself. The reason that the term value proposition is used, we used to call this products and services. The reason for the difference in name, quite simply, is that when you call something a product or a service, that takes the customer and their view of the product or service out of the equation. Calling it a value proposition is a realization that the only reason this thing has, the only value it has, is in the eyes of the particular customer segment. So rather than just simply describing what the value proposition is, it's important in this particular section to make list of why it would be valuable to a particular customer segment and how that value might be returned from the customer. In some cases, the value to them could be your time, and that they're trading their time for. Traditionally, of course, you're looking to sell a product or a service that would be compensated with cash or some other form of currency. Having defined the customer segment and defined the value proposition, let's go next to the customer relationships. And this is the area where you're making an actual connection between your value proposition and your customer segment. This is the area where you really can find value in the specific nature that you've defined for your customer segment and how that relates to the value proposition or one of the variances of your value proposition. One of the things I always talk about in terms of developing customer relationships is that rather than broadcasting the value of our product to a wide audience, we try to narrow into that specific point where that particular customer segment is receiving information and would be most likely to become aware of what you're making available. Various things would matter. One of the things that's being found right now in these incredibly challenging times that we find ourselves in is that school districts, universities, but particularly public school districts, are finding that they have to find a way to reach various customer segments with a value proposition that's normally provided to a very diverse audience simultaneously. For example, New York City is providing notebooks, computer notebooks, to homeless shelters, so that children that are in homeless shelters that normally would find their way into a classroom can still have access to classroom information. What we're trying to do here is we're trying to build a bridge between customers and value proposition so that they can become aware of each other. And the reason I like the fact that that particular box has a heart in it is because you don't want people to just like your value proposition. You want them to be in love with it. A great way to demonstrate that is that Harley-Davidson actually has people that tattoo their logo onto their body. Now that, I would argue, is a love relationship with a value proposition. Below that, you have channels. And the channel is by what means will you connect your value proposition with the customer segment. In some cases, that can be at a traditional brick and mortar store. In other cases, and becoming far more predominant now, that's through a customer relationship connection online and a delivery through UPS or some other form of delivery. We used to think that doing tax returns where you needed the support of a CPA is something where you would go into a meeting, taking material to their office and go through the process of providing the information for the tax return. And now we find that channel being very different, which includes sending the documents in a different way. The channel connects the value proposition to the segment. If we moved left from there are two boxes that are somewhat related, and that is on top, key activities would be those things that need to be done in order to create the value proposition and to prepare for the connection to the customer segment. It could be any number of things, and that will vary widely depending upon the nature of your business and what you're going to need to do in order to put yourself into a position where you're ready to open. The reason that key resources is right below that is more often than not, in order to complete those key activities, you're going to need resources. Now, the one that everybody always thinks about is, I'm going to need investors, I'm going to need a loan, going to need some kind of financial resource in order to conduct those key activities, acquire equipment, whatever the case might be. And in this particular case, we may find that there's an awful lot of creativity that's needed and a willingness to explore avenues for the acquisition of those resources that may not be apparent initially. An example of that is I had a customer that once was not able to get a bank loan for a new product line, but his new product was so important to his customer segment that the customer actually loaned him the money to purchase the equipment so that he could create the value proposition that was so important to the customer. Creativity in this area can often create options that may not be apparent at the outset. Next, we have key partners, and I like to define that in a very general sense, where we're not just looking at the people we'll need at the outset. For example, the services of an attorney to create an LLC or help to decide whether your entity will be for-profit or not-profit. The services of an accountant and or bookkeeper to prepare your financial structure for conducting business. You may need a contractor in order to either rehabilitate or make modifications to your location, even if it's just a warehouse for shipping product to customers. And it may require then materials that need to be purchased, and that goes back to resources that you're going to need. But then you go beyond that and you look to what kinds of partners do you need in order to conduct business and move forward. I've always thought that second, after the customer segment, employees, should your activity require them, are the next key partners. And certainly your ability to source and hire top quality people is going to have a major impact on the relative success of your business. I'd like to drop down to the lower right-hand corner now and talk about the revenue stream. It's not unusual for people to start on the left-hand side with cost structure and then determine the cost structure and add some kind of a margin to that and decide that's what the revenue stream is going to be. Quite frankly, I've always found that to be the opposite of what we need to be doing. I think we need to look at the value proposition, understand the value of that proposition to the particular customer segment, and do the research necessary to find out what kind of a number the customer segment will put on that value. And we need to do that without regard to what it's going to cost us. Once we've determined what the and we would hope the maximum compensation based on the perceived value of the product or service. Then we go back and we take a look at what it's going to cost to produce it. And the comparison between that cost and the revenue is the determination of financial feasibility. For those who determine the cost structure first, it could be that they're doing that just to decide early on whether or not they need to think about any of these other things. But I really believe that discovering value and monetizing that value first causes us to have a more realistic idea of what we can expect once we take our value proposition into the marketplace. Determining the cost structure then needs to take into account all of the key activities, all of the direct and indirect costs for creating the value proposition and delivering it to the customer segments, and in many cases providing service on that, particularly where service needs to be provided, for example, through a warranty, where no additional compensation would be available. If it's determined that the cost compared to the determined revenue stream is not going to yield a profit, we've got several choices we can make. Number one, we can try to find a customer segment that perceives a higher value. Number two, we can go back to the cost structure and ask ourselves, is there any way that we can change the reality of cost of producing and distributing the value proposition? For example, will the formula work better if we sell in larger volumes? And do we in fact need to look at the size of the customer segment, the extent to which they'll become regular and ongoing customers that would support a volume that will reduce the cost of the creation of the product to a point where we achieve financial feasibility. One of the reasons why the revenue stream area is larger than some of the others goes all the way back to what we were talking about with customer segments, value proposition, and the perception of value. Within that book of business, so to speak, that family of value propositions, there may be different revenue streams, source of revenue, amount of revenue for the variations in the value proposition and the customer segment. One customer segment might be in a geographic area that's closer to the area where we produce the product, therefore lowering the delivery cost that would yield a better margin. So we may need to break that revenue stream area up into smaller boxes to talk about the revenue. Now, it's not just, of course, the revenue on a particular delivery to a particular customer segment, but rather what type of volume we anticipate. And there we need to look at the revenue stream, both from the standpoint of our early operation of the business, and then what we expect down the road. Are we expecting a relatively small customer segment early on and expect to expand that going forward? What will that do to that volume do to the cost structure? How will that impact on our key activities and all of that kind of thing? But in any event, determining financial feasibility, I think, provides us with a lot of guidance about whether or not we need to challenge any of the assumptions that we've made earlier, whether or not, in fact, we should take this whole idea to the next level. This is a comparison in an area where certain decisions can be made. In fact, it's another way, I think, to view the business model canvas. This is a collection of information that ultimately can tell us whether or not it's advisable to go forward and develop a complete business plan. This does not create and provide the amount, the depth of information that would be needed for many of the people that might be bringing resources to the project, and in fact doesn't define it well enough, I think, for those that are planning to become involved, or their ownership or significant management, to make a final decision about whether or not to go forward. But this certainly does give us an early look at the process and what the challenges and opportunities are to advise us whether or not we should go forward, and if we should, what would that planning document look like, and what would the implication of the detail that document would provide that we frankly don't have room for on the business model canvas. First of all, I'd like to thank you for the opportunity to try this. I hope that this approach has still delivered some value to you. But way above and beyond that, I wish you, your families, and friends all well. This is a challenging time on a personal level and a business level for all of us. And I wish you all the best and good health. In addition to my regular Thursday hours, I've also offered some limited time on Wednesday afternoons and Friday morning. And for those of you that believe that you could gain some additional value from the Canvas by talking about it more specific to your particular concept or existing business, I certainly want to stand ready to provide that additional assistance. Thank you all for participating.